substantially. So, this path to profitability, something that we were talking about ad nauseum. EBITDA loss is just about 130 crores this time compared to a loss of over 300 crores. And it's also taken up the other stocks. So, Paytm has seen another 2% gain. Nykaa comes out with numbers today. That one is in focus as well. Delivery also. So, this whole, theme of new age tech stocks continues to
Although
move.
the joke, I don't know if you guys saw, it was
Adjusted
EBITDA. Adjusted.
We spoke about it all day on Friday. And I couldn't get enough of it.
All right, it gives itself to a lot of joke making. Anyway, let's have Manishi Raychaudhuri join us now. He's, of course, with BNP Paribas. Manishi, great to have you with us here. Thank you very much. How are things looking, Manishi? And let's just start with your assessment of earnings. What's your India team telling you? How have earnings in the third quarter been like? Have they been sort of worse off? I would imagine they've been worse off as compared to your expectations. And what does it do to 24 estimates? Go on.
Okay. If you look at it segment-wise or sector-wise, even within sectors, there's been a divergence as far as the earnings picture is concerned. I would say broadly, the larger frontline private sector banks have done well. IT has been a mixed picture with some companies doing well, some others disappointing. But we have had more consistent disappointments, possibly from the consumer discretionary and the consumer staple space. Right. So all in all, I would say India has turned out to be kind of a mixed bag with sort of a negative bias in this last quarter. And consequently, we have had earnings downgrades. If I look at it granularly, almost every sector within India, the consensus estimates have been downgraded over past 1 month and 3 months, with one exception, and that's the banking universe. Financials have had an increasing earnings estimates over 1 month, 3 months, and 6 months. And that seems to be some kind of a beacon of hope as far as the Indian investment universe is concerned.
All right, Oil India is really the stock of the moment, 8% higher and big volumes picking up on Oil India. As Sonal was telling us earlier, very good set of numbers. Net realizations for Oil India have picked up substantially, and there you go. That's the big stock move there. Manishi, good morning. You want to weigh in on the conversation we were having about the new age tech companies? Has your conviction there gone up, or are you still a bit cautious?
In our model portfolio, and we run an Asia ex-Japan model portfolio, we still don't have a representation from any of these companies. I think as long as we have cost of capital going up, through both risk perception rising and through the risk-free rates increasing, the pressure on the valuations of these new age companies would continue. These are the so-called long duration equity, the classic long duration equity, where a very large part of the value is in the terminal value. And therefore, even tiny little changes in cost of capital impact their valuation disproportionately. And that is something investors would have to be wary about. Even though many of these companies have declined significantly, I think as long as we have upward pressure on cost of capital, investors should be really selective in this space.
Okay, have to be really selective. So, tactically or otherwise, Manishi, what is your, you said banking is the only space where you've seen upgrades. But I'm sure, you're picking up ideas from across the board. What's top of mind? What's top of the list for you and your team right now?
Right. So private sector banks, as I mentioned, they clearly form the top of our asset allocation in the India silo of the Asian model portfolio. Apart from that, we have some exposure in consumer discretionary and in automobiles, even though we have reduced that exposure in automobiles a bit since early December. And we do have some exposure in IT and the conglomerates, both the ones in oil and gas, telecom, etc., even though the IT exposure was also reduced significantly in early December. A couple of the sectors that we are avoiding right now, number one, consumer staples, where the valuations in the present circumstances and with the possibility of a dampened consumption sentiment, they don't really fit our bill. And we don't have any exposure in the metals and mining space either.
Okay. In fact, you were talking about IT, right? KPIT Tech has hit a fresh high again this morning, and it's been one of the strongest stocks this year. In fact, at 869 on KPIT Tech, the stock is now up almost 25% in 2023. So let's just pull it up for you, KPIT Technologies. So Manishi, what do you do here in IT? You said that you're sort of nibbling in now. Do you look at the large caps? Do you go to the mid cap guys, maybe the companies that have an exposure to the fast moving electric vehicle auto sector? What do you do here within tech?
Right. So in Indian IT services, we had a significant exposure almost all throughout 2022. And towards the later part of that year, many of the frontline stocks actually did quite well. But in early December 2022, we reduced that Indian IT exposure significantly while retaining some exposure to the frontline companies. We think that the deal flows in the IT companies are decent, but at the same time, we haven't seen a materialization of the risks that the developed markets face today, particularly the United States. So that's why we are a bit concerned about that space. We think the concerns are possibly less than the tech hardware companies in Korea or Taiwan. But even in the Indian IT space, we have to watch out for deal flows and order flows to pick up a bit better in the so-called consumption-orientated sectors. So, that is actually our stance, and we are not really venturing into the lower tier stocks. Our focus, if you will, would possibly be concentrated in the top 2 or 3 names in the Indian IT service space.
All right, Manishi, always good hearing your thoughts. Thanks so much for stopping by and filling us in with your view on a whole host of sectors.